Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex quick look. I'm going to take a look at the sterling versus US dollar, an updated look at that currency pair from a technical perspective. Let's get started. We saw this pair move sharply to the upside and extend above some technical levels here. I'm going to go to the 4-hour chart to start off with. And if you look at this level right through here, this level was a technical area between 128.22 and 27 that we broke through yesterday off the US CPI data, and then the FOMC came in and pushed the price back to the downside. So buyers had their shot up here. They missed, and the sellers started to enter into the market. Now, that move to the downside has now taken the price down to this blue line, which represents the 100 bar moving average on the 4-hour chart. Now I'm going to shift back to the hourly chart because there's another level at another moving average at that level, and that represents this smoother blue line right here. That's a 100-hour moving average. So not only is the 100 bar moving average on the 4-hour being tested, but the 100-hour moving average is being tested near the same level, near the 1.2749 level. So that's going to be a key barometer for both buyers and sellers of the price. If you're a buyer of the sterling versus US dollar, you look at this move to the downside as a corrective move of something further that's going to move higher. And indeed, we have higher highs over the last week or so, or 4 days of trading. So this week's trading. But if this is a buying opportunity right here, then you don't want to see the price move below it. You want to buy against this level, hope the price moves back above the 200-hour moving average. That's a green line right through here, and starts its rotation back to the upside, maybe back toward this swing area, which we saw fail on the break higher yesterday. So that would be the progression to the upside. Conversely, if the sellers are more in control, if the sterling versus US dollar is going to move lower, maybe election concerns, or maybe the dollar moving, U.S. dollar moving higher as a result of the Federal Reserve. The shifts and the swings in these currency pairs obviously can happen at any one time. You can see that in the price action through this period right through here. But if you are more bearish on the pound versus U.S. dollar, then look for a break of this level. That would open the door for further selling. Then we'd have traders looking toward the low price that we saw in trading on Tuesday's trade. That low came in right around the 1.27048, and then look for this floor area down through here. This is probably the key level for the sterling versus US dollar going forward. We did have some pretty decent support in this yellow area right through here, forming this floor before moving to the upside, and then we return back to that level in trading on Monday, only to find willing buyers against that level pushing the price higher. So that would be the key progression to the downside. That if we got below those levels, that would increase the bearish bias going forward. So the pound versus US dollar is a key level right now. We'll see what happens right here. My name is Greg McCloskey. Good fortune with your trading. Bye bye now.